Balanco now joining us. He's the market master of the day. He's, of course, a much sought-after view on technicals with CLSA. Laurance, great to have you with us back on the program. Thank you for your time. Prashant here. I remember the last note you put out something called the breadth thrust it was, right? And you said, it's indicating that maybe there's a bit of an up move here. And the up move has happened. From the lows, markets have picked up smartly. Where from here, Laurance? Is it going to be, as some have put it, a W kind of a market, up and down a few times over? Or have we seen the worst already?
Yeah, I mean, I think to make a short answer to the question, I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000.
Okay, so you're seeing a move back above 26,000 perhaps, and the worst is over, Laurance. This is sounding really good. So then what is looking the best as India kind of recoils and goes back to those old highs? Where do you see maximum momentum building in the market?
Yeah, it's quite interesting. Late last year, we talked about the private banks over the PSU banks as a key sort of relative ratio. In the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks. But, just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen ICICI trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance, another sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now in the Indian market.
Private banks and big financials like Bajaj Finance. Indeed, I mean, what a move Bajaj Finance has showcased, right? Laurance, just to go back to the numbers and to understand the time range again, over how many months, what's your time period in which you see the all-time highs come back, and what's the exact level that you would track?
Yeah, look, so I think the key message here, if we just take the average back testing of the breadth thrust signal, 250 days after you get that buy signal, the market is up 82% of the time, and the gains on average is over 13%. So, if you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window.
Hi, Laurance. Good to have you on the show. We'll get back to equities. For the time being, I wanted to focus on two asset classes which are very, very important from an India equity market perspective. The dollar index, has it topped out? And are you looking lower levels on that one? And the other one is Brent crude prices as well. That seems to be breaking down. From an India market perspective, that's another tailwind for us. So give us levels on both these two.
Yeah, so let's look at the dollar index to start off with. December, we did see a break above the 106, 107 area. And what the significance of that, it's the upper boundary of the trading range that the dollar index traded between 2022 and 2024. What we saw basically in February is a sharp reversal in the dollar that saw the dollar index drop back into that trading range. So we've basically seen a reversal in the dollar index back into a trading range. So really more in a neutral setting, let's say from an intermediate term perspective over the next 6 months, that we stay range bound between this 100 and 106. If you take a step back and you look at the longer term charts, the dollar index has been in an uptrend since 2011. But this lower high that you've made in December relative to the September 2022 high does give you an indication that that dollar uptrend over the past 14 years is starting to top out. So the longer term profile is starting to provide us with evidence of lower highs. To confirm a major reversal in the dollar index, we still need to see a break below the 99 to 100 area. So next 6 months, look for a trading range and consolidation. On a longer term side, a break below 99 would be a major reversal of that dollar uptrend you've seen for the past 14 years.
That's interesting. Sorry, go on. Please, you want to finish that point?
Yeah, so I just wanted to touch on Brent then quickly.
Yes, please.
And then on Brent, you're quite right. Over the past 18 months, we've seen the $70 to $71 area be quite a key support area, but every rebound that we've had off that $70 to $71 support area over the past 18 months has met selling pressure as on every rebound. So what you've had is this characteristics of selling the rallies in Brent, which builds a pressure on this 70 to 71 and ultimately suggests a break below that level. And again, from a longer term perspective, that suggests a downside target of 51 to 52 on Brent oil.
Okay, 51 to 52 on Brent oil. I got that. So interesting and sort of strong views in that sense. So Laurance, just on that Nifty point, so 13% over the next 1 year or so, right? Just going by the signal.
Yes.
Roughly. Okay, got that.
And if you wanted a shorter term time horizon, at 90 days out, average gain is 7.5%.
Okay, got that. Laurance, what about the NASDAQ? And because, here the Nifty and the NASDAQ have been the two best performing markets and very closely correlated. Is the US market, how's the US market structure looking?
Well, it's quite interesting. If you look at year-to-date performance across asset classes, there's significant performance dispersion on a year-to-date basis. But even if you take it back to the Trump election victory back on the 5th of November 2024, and the major US indices from the Mag 7, NASDAQ, S&P, are either flat on the year or marginally negative, where China's positive, Europe's positive, and India's sort of recovered into positive territory with this recent rally off the low. So I think we are seeing major dispersion develop, and as long as the US doesn't roll over into a recession, a slowdown in the US can continue to see this performance dispersion. So I definitely wouldn't start an investment thesis with this was the correlation, because we've seen over time that correlations can break down and a lot of money can be made on a breakdown in these correlations.
Laurance, I just want to talk about Indian IT, because the thing is that the foreign dollars have finally started flowing back into this market after a long time. You mentioned financials will definitely be big leaders. IT may not have a fundamental reason to rally, but do you see it on the charts?
So looking at the charts, unfortunately, the relatives rolled over. We're below the 200-day. The absolutes rolled over. We're below sort of key moving averages, and we also below the 2021 and 2024 highs that we set. So we basically fallen back into the trading range that you saw in the first half of 2024. So we're not really seeing any leadership from this sector. The large cap names look sort of more vulnerable than some of the mid cap names. After the mid caps names obviously had significant corrections from their September highs. But yeah, it's not a leadership sector. It's not something that we're sort of pushing as an overweight, at least from a technical basis.
Okay, so not really leadership in IT. Get that point. Financials, you made that point very clear. Laurance, a lot of the state-owned companies, they were the leaders of the market up until September of last year, right? These big stocks, the PSUs, and even other capital good companies or the MNC companies like Siemens, etc. This was the red-hot part of the market. How do you find the structures here now?
We've started to see a bit of an improvement in the infrastructure names from the PSU side. So NTPC, for example, that's had a good recovery, but we're still below the 200-day. So there's a bit more work that we need to see, to confirm that in the same way that we've seen confirmation in the banking side. So the PSU non-banking parts of that PSU index is what we focus on, but we do need to see a bit more evidence that we've got a confirmed base where we think it's more sustainable on the upside. So a bit more work needed in that space.
Laurance, before we let you go, will India outperform from here on global markets? We've had a period of underperformance and now we're getting our mojo back. Do you think the Indian equity markets will outperform? That's point number one. And that 7% return that we've seen traditionally in the 90-day window, some part of that is already played out, the 4% that we've had in the last 1 month or so? Or is it from year on do we calculate it?
Yeah, so I mean, look, you're looking at an average, right? So, each move has different speeds to how we typically see it. So yes, we could spend a period of time just going sideways and then have another 4% upside within that sort of 90-day window to get there. So very hard to sort of pinpoint exactly from a time frame perspective. But the point is, and the message should be here, that breadth has improved. So the participation in the rally and the break back above the 50-day is typically and historically a strong signal that while we'll get pullbacks on the way, that we should now be buying the pullback rather than selling the rallies, which has been the behavior that we've seen from September. Now, to answer the question on a long-term basis, we still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Okay, Laurance, good to hear your thoughts. Thanks a lot for joining in and join more often. You sounded quite bullish and optimistic today. The bulls will love it. Thanks a lot, Laurance.
You only want the bull message, right?
No, we had a period of underperformance, Laurance. So good to hear a bullish thought as well. Thanks for joining in.